People post ARK Invest trade alerts on Twitter all the time without context, and they mean essentially nothing because most of these trading activities are simply noise. In order to put some meaning behind them, you need to put them into context in terms of how relevant they really are. Of course, for retail investors, 1 million shares of Palantir sounds like a lot, but to ARK Invest it isn't. So what we're going to do today is look at 4 days of trading activity, recent trading activity, and see what we might learn from that. So here's what a busy day of trading looks like for ARK Invest. And the reason that they provide these different boxes is because each one represents one of their ETFs. So that means that certain boxes are more relevant than others. And you can see here, this chart shows ARK's ETF by size. And the ARK Innovation ETF, their flagship, that has more assets under management, about just over $8 billion, than all their other ETFs combined, at least their actively managed ones. So all 6 of the ETFs that they send trade alerts for, the total assets that they're managing for those ETFs is around $14 billion. And just for edification, I put up the names here on the right along with their performance. And whenever you consider the performance of any asset, you need to benchmark it. And we've simply benchmarked these ETFs year-to-date performance against the NASDAQ at 38%. So ARK's trade alerts, what they say about these is that they make some statements. The average annual name turnover in an ARK portfolio is approximately 15%. That means that at the end of the year, you'd expect to see 85% of the same names in that portfolio as you did at the beginning of the year. If a stock's thesis is unchanged, then ARK tends to trade around the periphery. So what they'll do is that if a stock's share price has fallen in the market due to short-term events, they may increase their position, provided the thesis hasn't changed. If a stock is hyped, they'll trim the position and take profits. And what they'll do with those profits or losing investments that don't have thesis changes is reallocate the monies into names with higher upside to their valuation target. Now, individual security turnover numbers can be quite high and can range from 60 to 75%. So ARK has a lot of trading activities going on, and most of them, as we said, are noise. So we're going to try to extract some meaning from them today. So let's start by checking the math. Here you can see a trade alert for their flagship ETF. This was on December 6th. And at the top there is Trade Desk, and you can see percent of total ETF. That's very important, and we can check the math and see that the number of shares there times the current share price gives us a number. We divide that by the total ETF assets under management, and we get 0.38%, and the number ARK provides is 0.36. Close enough, right? Because prices change, and so does the AUM. Not that significantly, but it does over time. Below there for ARKQ, you see we've checked another name. ARK has percent of the total ETF at 0.86%. We did the math. It came in at 0.88%, so roughly the same. All that number, and you need to pay attention to that because it's quite important, all that number tells you is the significance of that trade relative to the total amount of money in that particular fund. So when we look at ARK's funds, this is rather interesting and creates a small problem when you're trying to dissect these trade alerts. What they'll do is, you can see here, their ETF concentration, and this phenomenon doesn't change over time. So this was an analysis we did before. It shows their concentration in May of 2021. You can see in pink there, these are the names that are held in 3 or more of their actively managed ETFs. In yellow, 2 or more. And then we've done the same thing there at the bottom, and still there's a lot of overlap. Look at the overlap in their flagship ETF, the top 10 holdings. They're all held in other ETFs. So when you get those trade alerts, you need to consolidate them and then add up all the similar names across ETFs to see what the total trade amount was. Now, this is from June 2023, but it's still represents the sort of overlap that you can see amongst ARK's ETFs. Now, if you're looking for research on these names, we've covered practically all of them. You can see some of the pieces here. What you can do is just go to our website, click that little search icon in the upper right, and you can search for any of ARK's stocks. We've covered nearly all of them. Now, some things that we want to consider here when we're looking at ARK's trades: the size of the trade relative to total AUM. That's that $14 billion number. The size relative to the ETF it's contained within. So you may have one of ARK's smaller ETFs that has a stock that isn't found in the other ETFs. So then the significance of that trade would then become the value of that asset in that ETF, and that's how you would calculate the exposure. And that's the next bullet point: the size of the trade relative to what's currently being held. So we're going to look at these various things. We're going to start by taking all those trade alerts we've done here, right? 4 consecutive days in a row of ARK trade alerts. We've consolidated them, assigned a value to each one, you can see here, and we have a significant amount of data to begin evaluating. So let's start with 3 interesting trades. So the first is Recursion. This is an AI drug discovery company. We've written extensively about multiple AI drug discovery firms. This company is fascinating. They actually look at cells to see, using computer vision, to see how cells react to drugs. Really, really cool technology, but we don't invest in stories. The last time we looked at Recursion, we said we wanted to see more progress deeper into their funnel of potential drugs to see that the platform works as expected. Now, that aside, what we can see here is we've taken some data from a site called Kathy's ARK, and take it for what it's worth. There are some discrepancies that we've seen there before, so I think this data can generally be trusted. But the interesting thing to note here is ARK's trades over time. So one day they were buying small amounts there, and you can see suddenly they buy a big amount. Well, the chart from Kathy's ARK reflects that, right? You could see that they've done that quite recently, and they've been really piling into Recursion. So essentially what they've done here is increase their exposure by 19%. So that's pretty significant. The charts here on the right, the one on the upper right-hand side, that shows you 5 days. So it simply says, all right, what changed from the beginning of the week to the end of the week that made ARK suddenly make a big trade? Well, it doesn't appear to be any price action that made that happen. It just so happens to be that they're adding shares of Recursion. Below that, you can see the year-to-date chart. So Recursion had a bit of a spike there, a lot of volume in the summertime, and now it's sort of trading back down to its normal levels. So that's Recursion. Another firm that was interesting here, next door, you can see the trades along the bottom there. So they went from a small number to a bigger number to even bigger, and then even bigger than that. So when we look at Kathy's ARK, they actually don't have a record of ARK holding next door. So we could simply look in the ETF. They added 1.89 million shares. They're holding 8.7 million, so they increased exposure by 28%. That's pretty significant. And now it's a 0.88% weighting in the next generation internet ETF, just that ETF. So that paints quite a different picture, right? And that's how when we calculate that exposure, we simply take the AUM of that particular ETF, not their total AUM, all right? Next one, Robinhood. This is a firm that we don't like, frankly, and we've written about why. And if you were somebody that ascribed to the principles of ESG, then you should be very upset with what this firm has done to retail investors over the years. But of course, nobody is. So be that as it may, ARK sold 37,151 shares. And the interesting thing about this trade is, look, one day they're buying 9,586 shares, and then 2 days later they're suddenly selling 37,000. What's going on? Well, the 5-day chart in the upper right there shows that there's been some price appreciation, right? So that could be the reason for the sell. The year-to-date chart, you can see indeed there's been quite the spike in price, but because we've actually done the math on this and looked at the number of shares they're holding, 31.8 million, we know that the fact they sold 37,151 shares is completely insignificant. So again, going back to the importance of putting these trades into context. Now, the movement relative to AUM doesn't tell us much. Here we've done those calculations. So we've simply taken over those 4 days the biggest trades and highlighted them here, and we can see the percent of total AUM reflected by these numbers. So the biggest would be Coinbase at 0.75% selling. So they're selling pretty significant amounts of Coinbase, and also UiPath at 0.21%. Why would that be? Well, what we can do is look at ARK's top holdings. So for the ARK Innovation ETF, their flagship, 64% of those stocks can be found in 10 names. Now, you'll notice there's 3 names crossed out here, and there's green numbers and black numbers crossed out. So the black numbers crossed out reflect what ARK's top holdings looked like this past summer when we last wrote about ARK's top stocks. Now you can see the changes over, about 6 months. So no longer in the top 10 are Exact Sciences, Shopify, or DraftKings. They've been replaced by CRISPR Therapeutics, Twilio, and Roblox. So what's the takeaway here? Well, the fact that they're selling a lot of UiPath and Coinbase, that makes sense, especially Coinbase being the most active of the entire lot. Well, that's because it's their biggest stock. Of course, it's likely that they would be trimming that. It's at 11.1% weighting, so that makes sense. Now, when we do some exposure analysis for popular stocks, so Coinbase, UiPath, Palantir, SoFi, we did the numbers real quick. Looks like they decreased their Coinbase exposure by 8%, so that's not a whole lot. Decreased UiPath exposure by 3%. UiPath recently had some good numbers, so it's no surprise they're trimming there. If they talk about trimming on hype, well, it's debatable whether or not the good numbers represented hype, but increased Palantir exposure by 19% and increased SoFi exposure by 10%. So just remember this. It's very important. You're never going to become a good investor by trying to ape the inexplicable actions of an active fund manager. They trade for a lot of different reasons, and there's no point in trying to follow their trades because that's not going to teach you how to become a better investor. What you need to be doing is investing in companies, not stocks. Now, just some parting thoughts here. So the question, of course, at everybody's minds is Mrs. Wood and her team better than 5% of active managers, or say 95%, who can't beat a benchmark in the long run? In other words, is she part of the 5% that can? Well, to accomplish that, their team is going to need to, first of all, be good at identifying disruptive growth companies. Okay, that seems to be their forte, but also correctly time the markets because they're doing a fair amount of trading. So these are really 2 different skill sets. They're going to need to master both to be in the top 5% of fund managers that can actually beat the market. So I'm going to put up another video here you might be interested in. This is a look at ARK's top stocks, and I think we've written about all of them. These would have been the top stocks that they held this past summer. So give that a look. Be sure to subscribe. We have more videos coming out on similar topics. Like this video. Please support our work. Thanks for taking the time to watch this today.